Hello and welcome to Pro Trader Strategies Market Commentary for Monday, April the 13th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about everything from economic to geopolitical, and then on top of that market analysis. Well, I do the same things in these daily market commentaries, but I layer on top of it some option strategies that I find to implement into my portfolio based on those assumptions we come up with by analyzing the economic, geopolitical, and market analysis. So, one thing I do also is these webinars where I'm going to drill down on every single option strategy about the days to expiration, the right timing of the environment, the right strike locations, all of those things to really take out all of the guesswork for you as a newer trader or even a savvy trader that has been trading options for a long time. I break down all of those nuances in order for you guys to be able to understand it, and I have some pretty good basis for why I'm picking all of those things like the strike location, so that you can understand. It's not just like pulling it out of the hat like you're going to see online a lot of times. All right. So what we usually do is start talking about the economic data. Well, it's a Monday. There's not really a whole lot of economic data. But one thing we did get, and we talked about this last week, was OPEC was going to be meeting, or they call it OPEC Plus now these days, and talking about production cuts. Well, you can probably see we got a little bit of buoyancy here in crude oil after having that massive slide from basically the 50s at the beginning of the year, or actually, yeah, in the 50s at the beginning of the year. Anyway, OPEC did meet. Trump somehow managed to get these guys all together and like talking, and they decided to have a production cut of 9.7 million barrels per day. That's everybody included, everybody that's in there. They all took their little cut per day. And then the United States, Brazil, Norway, and Canada came to an agreement to also limit their production by 3.7 million barrels per day. And all of that being said, you'd think it might give a little bit more lift to crude oil, right? That's a lot. That's like 14.5 million barrels per day in production cuts. Well, one thing is that's only about half of the demand destruction we've seen because of this shutdown in business here and across the pond. Everybody globally shutting down. The demand on that is, closer to $30 million a day in demand destruction that we're seeing there. So they did cut by about 14.5 million barrels, like I said, altogether. But demand destruction is definitely closer to that 30 million mark. So they only basically cut half of that. So really not putting a dent in the overall markets. We are at capacity across the board. We actually need this kind of production cut in order to not just have oil spilling out all over the place. All right. Unless you're willing to take home one contract of the /crude oil here, light sweet crude futures, one contract is 1,000 55-gallon barrels. So if you take one contract delivery, you can store 1,000 55-gallon barrels in your living room if you want, or backyard. I doubt your neighbors are going to really like that. And if you have an HOA, that might really not go over very well. All right, so on the overall markets, we've got crude oil moving higher by about 50 cents. Like I said, that production cuts really aren't going to do a whole lot. We are at capacity already for demand. We've got gold futures moving higher again today, making a new all-time high here again, 1756.8. We're talking about the dollar being weak, and I think there's $6 trillion worth of bond buying going on already by the Fed. So that's going to the expectation is that much printing press money going out there should weaken the overall dollar, right? Well, with gold being a dollar denominated product, it is skyrocketing. As you can see with the bonds, they are off by about 11 ticks here. trying to hold on to this. They're probably going to get a little bit of buoyancy because we're seeing some weakness across the board in the equities just about everywhere. VIX up 2 points on the day. We've got the Dow Jones Industrial Average down 500 points, just slightly off the lows, which were probably printed relatively at the beginning of this webinar. We're seeing, if we break it down into the 30-minute chart, so let's just go ahead and do it if we're going to talk about it. You can see from the open, if I highlight the overnight area, we can see that from the open, it has been almost unabated to the downside, and this move just happening. We just moved into this candle here. So you can see in the last 30 minutes, we had that low printed going down and testing very close to the 200-day moving average. Now, it's a little bit different when we go over there and look at the 200-day moving average right here, a 200-day moving average here. The other one is the 200 bar or the 200 segment, really is ultimately what that moving average comes out to be. So now that I have it on a daily, it's really considered the 200-day. A little bit different when you pull up the 30-minute chart. Anyway, you can see this is down 500 points on the day. Nobody's probably happy across the board because this is one of the first times we've seen the markets in negative territory in a little bit. It was really looking pretty strong. We did get above a lot of resistance areas like the 200-day moving average we talked about with this here. You can see we have the 200-day moving average finally settled above that on Thursday. Today opened up just below that, but above that, and have since started moving down. Now, if we take this as the extended hours, it looks a little bit different there. As you can see again, Thursday just settling above that. Tried to peel above that on the open. That move basically happened on the open, but we are above this Fibonacci line here of 81.65. So that's going to be pretty important. We do have a volume node in and around there for the bulls to keep an eye out for that. I do expect us to maybe start pounding back and forth here and creating a larger volume node between these two as the bulls try and support above that point of control. I talked about this. I think we're going to kind of stay within these areas here and bounce back and forth. It looks like that's kind of what we are starting to do. Yes, we will get overextended like we are right now, but I think we're going to stay within the value area, which lines up quite nicely with the Fibonacci's here and what we are doing. So I don't think we're going to go see that massive move to the all-time highs there, you guys. I think that we're going to at least stay within these value areas there. Major support right here. I don't think that we will see the lows again. I think that that is out at this point, but I do think that what we might see here is the markets wanting to peel back and forth in between this area here. Okay, that is the point of control. That's where value has been created, has been accepted. So I think that right now, with as much going on that nobody really knows, I think that that's kind of where we're going to stay, I should say. So one thing I forgot to mention was Caterpillar Deere got downgraded. One of those reasons is because of the slowdown. Well, is that going to really affect the farmers with producing goods? Yes, the restaurants are closed down, so one might say that there is demand destruction for those goods, but it's actually just moving over into the supermarket, where we're seeing those guys really have some good sales coming along. So Kroger's and stuff like that, Walmart, those guys are doing very well. As a matter of fact, Walmart was one of the few stocks I saw that was up on the day, like Walmart, Staples, not Staples, but like staple things such as like Budweiser and things like that people are going out there and continuing to buy. So I'm sure Kroger, haven't looked at it. It's probably up on the day as well. So those things are driving the market at this point. NASDAQ, like I said, off only about 24 points though right now on the day, which is nice. We've been talking about the Dow 1000 is the new 100. Well, NASDAQ 100 is the new market move on any given day as well. So we can take a look at the daily chart of the E-mini S&Ps, maybe take off the overnight session. As you can see, E-mini S&P is leading the way to the downside compared to the NASDAQ, which is not a bad thing, you guys. People are still putting money in tech. That means that they are not risk adverse. They're actually going after some of that risk. And we've got the Dow, E-mini S&Ps, and the NASDAQ all negative on the day, as you can see with this chart here. Now, let's take a look at the breakdown on the E-mini S&Ps. You can see overnight started rallying. That was basically on those production cuts. Word getting out as soon as the market opened, we heard that all these production cuts were happening. It was not, it did not last very long. As you can see, it's in this 130-minute chart. There is a pretty massive range. Market came in, tried to get a bit of a lift, but it just got slapped in the face for the most part. Overnight, pretty flat on the day, I would have to say, but you can see again on the open, no economic data for today, you guys. This is all just basically off of this OPEC meeting results, and market really just taking a slide. Now, COVID, I don't think that there was, I think that we are starting to see some of that flattening of the curve. People are coming out of the hospital. New York was one of the first times I think there was less overnight cases than basically the night before, so that looks good. I think this is a bit of profit taking as this market continues to try and filter all of the information coming out, and is going to be kind of volatile. But again, with the, say for instance, the E-mini S&Ps that we can pull up from the chart, I think the E-mini S&Ps have a little bit more room to go. We did on Thursday get back up into the value area, which is something I wanted to talk about. I think that the E-mini S&Ps could easily get back up to this area and should want to start moving. So they've been lagging a little bit. Once they got back up into the value area, this is all overextended to the downside. Not quite sure what happened there. All overextended to the downside with the E-mini S&Ps, but once we get back up into the value area, I think it's going to want to migrate back towards that point of control. So E-mini S&Ps have been a little bit of a lagger, which is normal. Usually people will go for the blue chips, for a little bit less risk appetite, and then go for the NASDAQ because that is a lot more risk. E-mini S&Ps has a tendency to lag on the upside and the downside for the most part, which I think is very in line with what we're seeing. People will be kind of going after that, which is a good thing in my eyes. All right, so that's about it. I haven't done anything with my portfolio today, you guys. I'm kind of sitting on my hands as the market has sold off, but I am looking for opportunities as always. But right now, I'm just going to let this play out. I'm still thinking the upside is still in and around where we're looking at. I don't think that the downside is really that much to worry about. It's just working through this, right? We're just basically getting up and downs, and these big moves, like a 50-point move in the mini S&P, is the new 20 or 30-point move in the S&P. So that's about all I got for you guys. Check out the webinar that we did on Friday. It was on the short call ratio spread, or the call ratio spread. And that is adding a little bit more risk. So if you're long the underlying, say with Walmart, I'm long Walmart, and I wanted to believe that the upside was in, but I think that there's a limited amount of room to the upside left. I was looking at EA Sports, which was also another good one. I think that going to the all-time high, let's see if I can pull up a chart of EA Sports. I think that looking at something like this, the 151 is a little bit longer in the tooth than what I want to look at, but I want to look at the daily chart, and we can see the 52-week high here is right around 115. Now, if I can sell a call spread or actually do a long call spread, I can participate on some of this upside momentum. Now, do I think that it's going to go above that 52-week high and just keep blasting off? Well, no. I think that if I get up to that 52-week high, that might be exactly where I want to start peeling off some of my trades, right? So, or some of my long stocks, especially in this type of environment, right? Without having a whole lot of information out there. Now, one thing to note is they do have earnings, and I don't know if I really want to do that with EA Sports at that point, but something along those lines with that type of thought process. Hey, if I can put on a long call spread, finance it with selling some shorts, then I get that upside from the long call spread. And if we get above 115, then I'd be happy to sell some of my stock at 115. I'm kind of talking myself back into that trade, and I don't really even know if I care about the earnings. I might want to peel maybe one or a third of my position on something like that. So I might actually start peeling back into that, take some risk off the table by doing that with this earnings trade. See how it works out. I don't usually set it up like that, but we'll give it a shot and see how it works maybe. All right, so that's all I got for you. I got to go over this disclaimer, you guys, because we are an educational company. We are here to teach you guys how to swim, in a sense, teach you guys how to trade options. It's up to you to implement those options into your portfolio, given your portfolio, your risk parameters, and all of those nice things. So please take a moment to go over this. And if you can't take that,